Hello everyone, welcome to today's video. In today's video, I will walk you through 4 different investment opportunities where you can invest your money and grow your wealth substantially. Before we dive into the video, I want you guys to know that investment classes are mainly classified on 3 bases: liquidity, risk, and reward. Liquidity simply means that how easy it is to sell your investments and convert it into cash. Now that you know the 3 main factors that determine an investment class, let's get the video started. Number one, a savings account. A savings account is a basic bank account that allows you to deposit and withdraw money whenever you want while earning the interest. Savings account is very liquid in nature. That is the main reason why we usually tend to spend a lot, because it is easily convertible into cash. Whenever you want, you can just go to the bank and withdraw your money from your savings account. Savings account is very liquid in nature. As I told, you can withdraw your money anytime you want, anywhere you want, any branch you go of your bank account. They will just give you the money if you tell that I want to withdraw money from my savings account. Savings account has absolutely no risk. If you have invested your money in a safe bank, then it has absolutely no risk. And the returns, the main part is the returns. When you come to the returns part of the savings account, it is substantially very low to comparatively to other assets. The savings account usually gives you 3.5 to a maximum of 4.5% returns, which is substantially low. But according to the risk you're taking, which is absolutely no risk, this is the maximum returns you can get. I would never suggest to go and invest in a savings account, but this is just an option which is out there, so I'm just letting you know. Option number 2 is a fixed deposit or an FD. You must have heard your parents telling that let's go and put your bonus into an FD of any bank. That is the safest investment option our parents think it is, because it has low risk. Obviously it has low risk, and the returns are slightly higher than the savings account. Now coming to the liquidity part, it is not very liquid in nature. Savings FDs are not very liquid in nature, because if you tend to take your money before the fixed period ends, before your amount is matured, you will have to pay a penalty fees and you will miss out on a lot of interest. So FD is not very liquid in nature, and the risk is absolutely no again, but the reward is between 5 to 7%, but this reward is higher with no risk, because you're not going to touch your money for the next 3, 5, 10, or at even 1 year. It depends on which plan you're taking. So it's like a fixed amount. You're giving a fixed amount to a bank for a fixed period of time, and that you're not going to touch it until that fixed period ends. And after that, you can withdraw your money. After the maturity of the bond is done, you can withdraw the money, and you will also have the interest which you would have earned on that money, putting your money into the fixed deposits. Now, coming to the option number 3. The option number 3 is the most commonly heard and the most thrilling word, the stock market. You would have heard a ton of newspapers, a ton of people talking about the stock market, telling that the stock markets went down today, the stock markets went up today. So the stock market is also a very, very, very good and my favorite investment option, because the reward ratio is exponentially high in the stock market. But the risk which you will be taking in stock market is also twice, no thrice, no 4 times which you will be taking in the fixed deposit or a savings account. So the liquidity of stock market is medium, because it will take usually 2 to 3 business days for your investments to sell your stocks and convert them into cash. So the liquidity is medium, the risk is too high, and the reward is extremely high. Warren Buffett, one of the greatest investor, created his 100 billion worth of net worth from the stock market, in investing in long term in 50-60 years. So if you're coming to stock market with a long term perspective, it is really great option. But before investing, you will obviously have to learn a lot of things. That is one fallback of stock market, but that learning might change your life. It will change your life if you're ready to invest your time and invest your money with a certain risk, and if you're ready to analyze companies, pick stocks and sell stocks and do trading, then you're the perfect guy to go and invest in the stock market and earn extremely high returns. Option number 4 is a mutual funds. Let's say you're a guy Working on a 9 to 5 job, working 12 hours a day, 18 hours a day, you don't have time, you don't have time for anything else, not for your family. You just come home from work and just sleep. But you have the money, you have the risk appetite, and you also want to take risk, then mutual funds is a very good option, because obviously you don't have the time to analyze companies and pick stocks and do all the good stuffs in the stock market, because you're working, you have a very busy schedule. So stock market could be a very good place for people like you who are willing to take risk but don't have the time or expertise to analyze companies. In the mutual funds, what happens basically in a mutual fund is you give your money to a fund manager. The fund manager will be a experienced guy, a talented guy, who will take your money, and invest it in the index, in the stock market, Indian index, in different asset classes, bonds, real estate, or stocks, or anywhere. He will invest your money. He will take the money from you. He will invest your money. He will make the returns for you. The returns in mutual funds are usually around 7 to 14%. It hovers in this range every year. So if you're willing to take risk but you don't have the time, so mutual funds is a great option. And the liquidity of mutual fund is medium, because it usually takes 2 to 3 business days for your investments to be sold, and for you to get the cash it usually takes 2 to 3 business days or working days. And the risk in mutual funds is low, substantially lower than the stock market, and the rewards is good. The rewards is pretty good for a person who doesn't have time. Just give your money to a third person and he will invest your money into the stocks or whatever thing it is, and you'll get, sitting at home, 7 to 14% returns every year. But there is a drawback of mutual funds. There is something called as expense ratio. Obviously the mutual fund owner or the fund manager won't invest your money and earn returns for you for free. So they usually charge this thing called as expense ratio, and expense ratio is somewhere between 0.5 to 2%, depending on which mutual fund you have picked. There are a lot of mutual funds available for you to invest. You can just go and download apps like Upstocks or any app and search the mutual funds and select whichever mutual fund you want and put money into that. So now that you know the 4 different investment options, start investing sensibly and wisely. And I have a bonus tip. If you're like a 20 years, 30 years old, please start investing. I know you have recently started earning. I know you recently got a job and you want to spend everything and you want to party. You live only once, but at least invest a little bit. 500 rupees, 1000 rupees, 2000 rupees, how much ever you can save every month, invest it. Because 20 years, 30 years down the line, when you look back and see your old self, you'll regret that why did I party so much? Why didn't I invest even a little bit? I would be better off financially now if I would have invested back then. So please be sensible with your money. Don't spend everything. Spend everything. I mean, spend little bit, but also invest. Investing is really, really, really important. You won't know the value of investing now. After 30 years, you'll realize that why didn't you invest? And if you invest after 30 years, you'll be very happy that I invested. I'm financially secure now. And if this video added any value to your life, if you gained any knowledge from this video, please share it here on.